Welcome to the Daily Business and Finance Show. Electric vehicle demand dips. Trump presidency threatens clean energy funding. Biden's coal leasing stance. Big banks' capital holding requirement in question. Iranian president survives helicopter crash. Nvidia's Q1 outlook spells trouble for AI chipmaker stock. Sony and Apollo eye Paramount Global deal, and Boeing delays first crewed flight. Stay tuned after the short ad break to delve deeper into these headlines. Interest in electric vehicles, or EVs, among U.S. consumers has seen a decline. The number of individuals contemplating them as a potential purchase has decreased compared to the previous year. This information comes from a study conducted by J.D. Power. Several factors contribute to this trend, including concerns about affordability and charging, as well as insufficient awareness regarding incentives. In the stock market context, there's been a notable decrease in EV stocks over the past year, while traditional automobile stocks have experienced gains.
A report from Wood Mackenzie suggests that a potential second Trump administration might put at risk $1 trillion in clean energy investment and could push back peak fossil fuel demand by 10 years. Alterations to environmental regulations have the potential to reverse Biden's policies, leading to a decrease in expenditure on low-carbon energy and infrastructure. This could result in an increase in natural gas demand and a reduction of electric vehicle stocks by half by the year 2050. The escalating U.S. debt may further restrict government spending.
Last week, crude oil prices reached a monthly peak, driven by encouraging economic signs from China and the U.S., the two largest oil consumers globally. The falling value of the dollar and decreasing U.S. crude inventories further bolstered this trend. In other news, a proposal to cease future coal leasing on federal lands was put forth by the Biden administration, eliciting criticism from the National Mining Association due to worries about energy security. Looking at stocks, U.S. Gold Corp led advances in energy and natural resources sectors, while Altus Power experienced the most significant drop.
3 regulatory authorities, namely the Federal Reserve, the Federal Deposit Insurance Corporation, and the Comptroller of the Currency, are considering a reduction by half of a proposed 20% capital increase for major banks. This consideration follows resistance from banking CEOs such as Jamie Dimon from J.P. Morgan, who contend that it could affect profits and lending. Discussions are ongoing with no assured result.
An aircraft, specifically a helicopter, was transporting the president of Iran, Ebrahim Raisi, along with the foreign minister Hossein Amir-Abdollahian. Unfortunately, it crashed in a region known as East Azerbaijan Province. The cause of this accident is attributed to heavy fog. Reports suggest that their lives are in danger and rescue teams are finding it difficult to access the crash site due to challenging conditions. The general public is being requested to offer prayers while search operations persist.
Interactive Brokers suggests that Nvidia's first quarter performance could influence its stock and 2 other assets associated with the artificial intelligence boom. As a key player in powering AI applications, Nvidia is anticipated to announce substantial increases in earnings and revenue for the first quarter. Concurrently, a surge in copper prices due to demand from AI adoption has impacted utilities stocks and the S&P 500 utilities sector. However, experts warn that these rapid price fluctuations may not be sustainable, since constructing power plants is a process that spans years.
Sony Corporation, in conjunction with Apollo Global, are reevaluating their $26 billion all-cash proposal for Paramount Global. This reconsideration is subsequent to a non-disclosure agreement that allows them to scrutinize the financial status of the company. The recent decline in Sony's stock price has also played a role in this development. A final decision on this matter is anticipated within the next few weeks.
The inaugural manned mission of Boeing's Starliner, initially set for the 21st of May, has been deferred owing to a slight helium leak in the service module of the spacecraft. This postponement extends the launch by a minimum of 4 days. This hindrance arises as Boeing persistently trails SpaceX in the American space race.
And that's a wrap on the Daily Business and Finance Show. Stay tuned, stay informed, and we'll catch you in the next episode. Until then, keep investing wisely. I'm Montgomery Jones.
And I'm Amalia Dupre. Goodbye for now, until we meet again tomorrow. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.